Just trying to finish up the BSA AML section within the new text, and that is starting with high-risk customers, section 12 on page 917, PDF page 917. A. Non-bank financial institutions, from the 2010 examination manual in the OCC AL 2004-7, the definition of high-risk customers, the definition of non-bank financial institutions is institutions other than banks that offer financial services. These include casinos and card clubs, securities and commodities firms, money service businesses, insurance companies, other financial institutions such as dealers in precious metals, stones, or jewels, pawnbrokers, loan or finance companies. Compliance requirements for NBFIs. Banks with non-bank financial institutions accounts are required to develop policies and procedures to identify NBFI relationships, assess the money laundering risks of NBFI relationships, conduct ongoing due diligence on the NBFI relationship, and ensure that NBFI accounts are included in the bank STAR monitoring and report systems. Other compliance requirements include conducting due diligence, considering the products and services offered by the NBFI, the location and markets served by the NBFI, the purpose of the account, and the anticipated account activity. MSB compliance is subject to BSA, or MSBs are subject to BSA, and they must register with FinCEN. If required, MSBs must be licensed by their state. And risk factors for MSBs include letter A through letter I. A. FinCEN registration and state licenses. B. Written BSA AML program and designation of a BSA officer's name and contact information. C. Established banking relationship and other account activity consistent with expectations. D. Established business with an operating history. E. Whether the MSB is a principal with one or a few agents or is acting as an agent for one principal. F. The MSB provides services only to local residents. G. The MSB's customers conduct routine transactions in low dollar amounts. H. The actual low-risk transaction activity for the MSB's business operations is consistent with information obtained by the bank at account opening. I. Money transmitting activities are limited to domestic entities or are limited to lower dollar amounts. The enhanced due diligence on the MSB's required by banks should include a review of the MSB's BSA AML program. The results of the MSB's independent testing of its BSA AML program, the written procedures for operation of an MSB, an on-site visit, a list of agents, including locations within or outside of the United States that will be receiving services directly or indirectly through the MSB account, and F. The written agent management termination practices for the MSB and employee screening practices for the MSB. Professional service providers. 1. A third party that, and this is part B, a third party that acts as an intermediary between a bank and the client, such as a lawyer, accountant, or investment broker. 2. These accounts allow for ongoing business transactions with multiple clients with whom the bank generally has no independent relationship. And 3. They may be more vulnerable to money laundering. Banks must adequately assess the risk at account opening and monitor for suspicious activity. Non-governmental organizations, NGOs, and charities. NGOs are private, non-profit organizations that pursue activities intended to serve the public good. 2. Because the flow of funds into and out of an NGO may be complex, they can be susceptible to abuse by money laundering and terrorists. And non-NGOs and charities is part C of this section. Number 3, in addition to collecting CIP information on the NGO, due diligence should also consider A through H. A, the purpose and objectives of their stated activities. B, geography served, including headquarters and operational areas. C, organizational structure. D, donor and volunteer base. E, funding, and disbursement criteria, including basic beneficiary information, G, affiliation with other NGOs, governments, or groups, and H, NGOs, internal controls and audits. 4, for high-risk accounts, the bank should require stringent documentation and verification. Transaction monitoring should be established. 5, and this is all still under non-governmental organization, enhanced due diligence should include a couple other items outside of the risks to consider. So those are evaluating the principles, obtaining and reviewing financial statements and audits, verifying the source and use of funds. D, evaluating large contributors or grantors to the NGO. E, conducting reference checks. Cash-intensive businesses is Part D of the high-risk customers account section. 1, cash-intensive businesses potentially susceptible to money laundering or terrorist financing include A through H. These are convenience stores, restaurants, retail stores, liquor stores, cigarette distributors, privately owned ATMs, vending machine operators, parking garages. 2, banks should conduct a risk assessment that considers A through G, the account purpose, the volume, frequency, and nature of currency transactions. Customer history, for example, length of relationship in CTR and SAR filings. D, primary business activity, products and services offered. E, business structure. F, geography, locations, and jurisdictions of operations. G, lastly, availability of information and cooperation of the business providing the information. Last part under cash-intensive businesses is for high-risk customers. The bank should conduct on-site visits, management interviews, and reviews of transactional activity. Subpart E, non-resident aliens and foreign individuals are also considered high-risk accounts. Foreign individuals include resident aliens and non-resident aliens. A bank CIP program must include the identification requirements for NRAs and foreign individuals. Banks must have policies and procedures that provide for sound due diligence and verification practices, risk assessments, and ongoing monitoring of NRA accounts. NRA account risk factors include A through E, account holders' home country, types of products and services used, forms of identification available, source of wealth and funds, and unusual account activity. Politically exposed persons. PEEPs. A PEEP is a current or former senior foreign political figure and that person's immediate family and close associates. Senior foreign political figures include, and were actually described before in the foreign bank account section and foreign correspondent bank account section, as a senior official in the executive, legislative, administrative, military, or judicial branches of a foreign government, a senior official in a major foreign political party, a senior executive in a foreign government-owned corporation, any corporation, business, or other entity that has been formed or for the benefit of a senior foreign political figure. The immediate family of those individuals includes parents, siblings, spouse, children, and in-laws. I think in the previous section this was more expansive to include grandparents, etc., grandchildren. Close associates are defined as someone who is widely and publicly known to maintain an unusually close relationship with the senior foreign political figure, including someone who conducts financial transactions on behalf of the political figure. Banks must establish risk-based controls and procedures to identify PEEPs. Banks that have PEEP accounts must conduct risk-based scrutiny of their accounts. Risk-based due diligence of a PEEP may include letter A through letter I. A, identifying the account holder and beneficial owner. B, obtaining information directly from the individual regarding possible PEEP status. C, identifying the country of residence. D, obtaining employment information. E, checking references. F, identifying the source of wealth. G, obtaining information on immediate family members or close associates that have authority over the account. H, determining the purpose of the account and the anticipated volume and nature of account activity. And I, making a reasonable effort to review public sources of information. Section G, embassy and foreign consulate accounts are the last types of high-risk accounts we're going to discuss. The bank shall obtain comprehensive due diligence on embassy and foreign consulate account relationships commensurate with the risk presented. A, B, C, D, and E are risk factors for embassy or foreign consulate accounts. A being accounts from high-risk countries. B, accounts with substantial currency transactions. C, account activity inconsistent with its purpose. D, accounts that directly fund personal expenses for foreign nationals. E, official embassy business conducted through personal accounts. Banks should fully understand the purpose of the account as well as the expected volume and nature of the account activity. And 4, banks should establish monitoring policies and procedures. I'm in subsection 13 of the BSA and AML Regulations, and this is the records retention section. You see A through A through L of this section. Extension of credit in excess of $10,000 for non-real estate purposes must be the original microfilm or other production of these documents must be retained for 5 years. International transactions in excess of $10,000 for non-real estate transactions, the original microfilm and other reproduction shall be held for 5 years. The evidence of the taxpayer identification number in microfilm, original, or other reproduction form shall be kept for 5 years and separate from backup withholding requirements. The signature card shall be kept for 5 years. Account statements, checks in excess of $100, these are all 5 years. The records to reconstruct demand account, 5 years. CDs or records on the purchasers, 5 years. Purchases of monetary instruments of at least $3,000, 5 years. Documentation on foreign shell banks, 5 years after the termination of the account relationship. Records of all extensions of credit in excess of $10,000 does not include credit secured by real property, and records must include the borrower's name and address, credit amount, purpose of credit, date of credit, and these records must be obtained for 5 years. Wire transfer or direct deposits, type of information that must be retained for 5 years is all deposit slips or credit tickets if the transaction exceeded $100. Enforcement under BSA AML regulations involves civil penalties, FIRA penalties, criminal penalties, and others. For civil penalties, the fines can be up to $25,000 or the amount of the transaction up to $100,000, whichever is greater. The penalty for negligence will be $500 per violation. That's actually kind of reasonable. FIRA penalties are your usual $7,500 per day for violations of laws and regulations, $37,500 per day if violations are unsafe or unsound practices are engaged in recklessly or are part of a pattern of misconduct that causes more than a minimal loss to the bank or any pecuniary gain to the parties involved, and penalties up to $1.425 million per day against persons who knowingly commit a violation and knowingly or recklessly cause a substantial loss to the bank or a substantial benefit to the party. Criminal penalties for willful violations are up to a $1,000 fine and or 1 year imprisonment. The pattern or in conjunction with the violation of another law can be up to $500,000 fine and 10-year imprisonment. So I think that's the range, somewhere between $1,000 and $500,000 and 1 to 10 years of imprisonment. Doesn't sound high enough to me. Anyways, enforcement statement, Section D under enforcement actions. The banking agencies issued a joint statement in July of 2007 on BSA AML enforcement, reaffirming the 5 pillars of a BSA AML CIP program, explaining how supervisory concerns will be communicated, including A through E, which is A, informal discussions between examiners and bank management, B, formal discussions between examiners and the board of directors, C, supervisory letters from the agency to the bank's management, D, formal communications from the regulatory agency, including findings in a report of examination, indicating a deficiency or weakness in the bank's program, and E, formal communications from the regulatory agency to the bank, indicating a violation of law. 3, dictating that cease and desist orders may be issued for A through E. A, the failure to maintain a BSA program, including failure to have a BSA program, including a CIP program that has the requisite elements, and 2, failure to implement a BSA program that has the required elements. B, defects in the BSA program that indicate the program is not effective. C, systemic failure to file BSA reports. Failure to correct a previously reported deficiency in the institution's BSA program, or failure to file a SAR when required. So that concludes the BSA AML Regulations section. Just for the sake of trying to memorize it, the consumer notice is here at the end of this regulation. The title is Important Information About Procedures for Opening a New Account, and reads, to help the government fight the funding of terrorism and money laundering activities, federal law requires all financial institutions to obtain, verify, and record information that identifies each person who opens an account. What this means for you is that when you open an account, we will ask for your name, address, date of birth, and other information to allow us to identify you. We may also ask to see your driver's license or other identifying documents. Seeing if there's any other practical applications in this section.